Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and also what's on the horizon as well. We're joined today by Justin Wolf from Forest Area Federal Credit Union. Justin, thanks so much for joining us. Today's topic has to do with making the best choices when it comes to loans and borrowing money. Am I right in that?
Yes, yes. Hi, Mark, and hello, Northern Michigan. Thanks for tuning in to another
Yeah.
digital studio with us. Yeah, borrowing money can be a big deal. We do it for some of the biggest times in our lives, transition points, and then sometimes we do it for other reasons. So, yeah, why not talk a little bit about what to think about and make smart decisions when you're borrowing money?
Absolutely. It's one of those things where when we do it, it tends to be very important, but it's not one of those things that we do often enough to have it easy to easily understand it. So I'm glad we're taking some time to talk about this tonight. All right. So what should we all think about first when borrowing for a purchase or some other need that we may have? What's the first thing that we really should be talking about and thinking about?
Yeah, well, so for purposes of this discussion,
Mhm.
I'll probably set aside credit card activity, credit card usage. I mean, that's a lot of this will can apply to that, but let's think about our small loans to because the water heater breaks down, purchasing a vehicle, purchasing a home, a boat, a whatever, stuff like that. But what do you want to think about and really give it some thought and ask yourself, is this a want or is this a need? What am I doing here? Because engaging in a borrowing activity is something that's going to take place over a period of time generally, and really considering, what does this mean? What am I giving up? What part of my cash flow is this loan obligation going to take? That's an important conversation to have with yourself, or to have with a trusted advisor, or have with somebody else in your household, if that impacts them also. Because when you take on a new loan in particular, it comes with a monthly payment. So how does that monthly payment affect what you're doing already with your money? And just take a minute and think about it, because if we're buying a car, or a toy like a boat, a jet ski, a snowmobile, something like that, it can be easy to get excited about those purchases, and we want to be excited with you also as a lender. But you really have to think about, what are the total costs, what are the things that are going to change, especially if you're upgrading in vehicles. Look into the insurance costs that go along with that vehicle. They might be different than what you were used to paying on an older vehicle or a different model vehicle. And then I really encourage people to take a look at their budget. If they haven't created a budget before, now might be a great time if you're thinking about borrowing, so you can see what effect that payment is really going to have on your daily, weekly, monthly life as that new payment starts coming out of your bank account, because you might have to consider making changes elsewhere, to maintain your lifestyle, or continue doing some of the things you want to do, or simply to make sure that you're not going to go over budget. Because another important piece of your overall financial picture, I certainly encourage people to save money also. Put money away for a rainy day. And that can be tough. So what impact is this new loan payment going to have when you take that step?
Yeah, because a loan is a commitment and an obligation, but it's very easy to get swept in when you think, oh, for $280 a month in my car payment, I can drive around this car that smells great and looks great and all of these things. But it's not just $280 once; it's a month. It's important
Yeah.
soul searching and questions that you should ask yourself before you even approach that. All right, so you've asked yourself those questions and you've arrived in a good place. So you've decided to move forward with that. What questions should we then ask our lenders?
Well, you don't even have to. There's a couple more things you can do before you even start talking to your lender. First, know what's going on out in the marketplace. Kind of get a sense for what interest rates, where they're at in your local market, what your borrowing options are, who you can borrow from. Are you going to borrow locally from a bank or credit union, or are you going to use an online lender, something like that? So know what the rates are out in the market. I will give a point of caution. Most lenders, we advertised our lowest possible rates, right?
Okay.
And interest rates can be impacted by so many different things. What type of collateral are you using? What is your credit score? So knowing where your credit lies, or at least a ballpark range, is going to help you understand also what type of interest rates you're eligible for. So it doesn't hurt to do a little investigation. You can do it right on your home computer and find out what type of interest rates for different types of loans lenders are offering. And you know what? If you get talking to a lender and the rate they quote you isn't um, what you saw on a website, there's probably a reason, and ask them about that. But so now fast forward, you're talking to that lender, ask any questions that you have. There are no dumb questions except for the one that you don't ask, because we need to know these things. You should ask things about, how can I make my payment? What different options? Because one, you want to make it easy for yourself. And then there's so many payment options available now through technology and online banking and different methods and modes. So ask your lender, how can I make my payment? And then talk with them about what makes it easy. Because if the making the payment is easy for us as the borrower, we're going to be more likely to make it on time, not forget about it. Maybe we set it up on automatic payment, whatever the case may be. You might want to also ask them, is there a grace period on the payment date? Can I choose my payment due date so that it helps align with how my paychecks flow in and my overall household cash flow? That might be a nice flexibility option. So you may as well ask them about it. And then finally, depending on the loan type, ask, are there any costs involved besides the interest or the finance charge I'm going to pay? Are there any loan fees? Is there an application fee? In the market now, that's not too commonplace for what we call consumer mortgages, your personal loans, car loans, boat loans. Usually not a whole lot of extra costs in those. You get into borrowing against a home or a piece of real estate, yeah, there's going to be other costs involved. So make sure you ask them about those. And in many cases, lenders were required to disclose those costs to you. But even before they get to disclosing them to you on paper, have a conversation so that when you get them on paper, you're even that much more prepared to understand what you're looking at and what it means.
It sounds like, well, we don't want to overshare with our lenders. It sounds like talking about maybe some concerns or what your situation is can help the lender and you find a solution that works for you for a loan. If a payment's a little bit too high, but you don't mind extending it a little bit longer, or, I get paid on this date, it sounds like sharing your situation with your lender may help them craft and create the best type of loan for you. Is that accurate?
It certainly is, Mark, because look, especially at banks and credit unions, and especially when you're working with somebody locally or has a presence locally, this is a relationship business. If we don't help set our members and our customers and our borrowers up for success, they're not going to come back to us. They're not going to trust us. They're not going to refer their friends and family to us. So being able to have conversations and talk about the things that your lender can offer you to make your borrowing easy and your repayment easy, yeah, there's going to be some flexibility in certain areas where they can really help you make this borrowing plan work with all of your other goals.
One of the really nice things about being able to actually walk into a branch and sit down with somebody who who you've seen around town to deal with locally, I'm sure that's one of those benefits. All right, so we've talked a little bit about collateral. So what are the most common types of loans that folks are dealing with, and how is collateral used in a loan agreement?
Well, I prefaced it earlier. Collateral can play a factor into whether or not you're going to get the money you're asking for. For
Yeah.
example, let's take a car loan. When you're wanting to buy this vehicle, this car, this truck, the van, whatever it is, your lender is going to look up a value on that vehicle that you're buying, and they're going to take that as collateral, so that if the borrower doesn't pay after a period of time, there's something the lender can take away from that borrower and try to recuperate their principal balance that they laid out. So when they obtain those values, that's a good conversation piece also, because sometimes a seller is asking more for a vehicle than what our valuation sources say it's worth. How much you borrow against that vehicle compared to its overall worth might have an impact on your overall interest rate, or how long of a repayment term your lender is able to offer you. What kind of condition the collateral's in might play a factor, although not too often. But lenders are going to look at that whole picture. If I really oversimplify it, lenders are going to look at, can you pay us back the money within our standards?
Okay.
What collateral are you going to offer us in this transaction, and how do we feel about that collateral? And then overall, what is your credit history and credit experience through a credit score? We're going to look at those three factors, and all of that will meld into the offer that's made in terms of an interest rate and repayment term on that loan.
Going off script a little bit here, but how important is that credit score when it comes to as a customer coming in to talk about a loan? Credit score pretty important. We hear it all the time, but I've got you, an expert, right here. Is it pretty important?
Excuse me. Unfortunately, in some ways, it's the basis for which we use. It's called risk-based lending,
Okay.
and it's a factor of risk. There's a lot of things that can be said about credit reports, what's on them, what's not on them. I think I've touched on that in previous segments. Yeah. And it's so your credit is important. We have to work at it. You're going to want to keep the better your credit, the better deal we're going to be able to offer you. Whether we largely like that method or not, it's the method that's in place for regulated lending across the United States. So, but also, talking with your lender, getting to know your story is crucial, because just because you have a lower credit score or you have an event in your credit past that has blemished it, doesn't mean that you're out of luck for a loan. There are so many lenders out there that do want to help and can do so in a constructive way, even though maybe you have a lower credit score or some damaged credit history. Lots of lenders out here that are here to do the right thing and help repair that credit history.
All right, good to know. All right, so what do I need to think about after I've gotten that loan? It's all excitement there because you got your new boat, your new car, or your new hot water heater, or whatever, which isn't as exciting until it's time to take a shower. So what do you think about after you get your loan? You're not done thinking, right?
Yeah, I would just say be aware of the interest rate environment. And because especially right now, we are in a higher interest rate environment. If and when interest rates come down, be aware of that. You may be eligible to refinance your loan and get it at a lower interest rate. If you're able to do that, you're going to pay less over time for that item or need that you financed. It might shorten up the term, how long it takes you to repay that loan. So there's some benefits there. In some cases, it may not benefit you greatly to refinance for 0.25%. The rule of thumb in the industry for a long time has been, if you can save 1%, you should be considering refinancing. So be aware of the interest rate environment. Talk to your lender, call them up, say, hey, I see some things have moved. Is there any opportunity for me here? The other thing I would encourage people to do as time goes on is, because people might acquire other debts, or other debts might go away over time. Let's say one of my vehicle loans pays off over time. I reach that end date, and now I'm looking at my budget. I feel, I've got a couple extra $100 here. Where can I put it to work somewhere else to maybe accelerate the repayment on another loan? There's lots of methodologies to do that. Do I attack the highest balance loan first, or the lowest balance, the highest interest rate or the lowest interest rate? And to that, I say, work that budget and take a look. I like to look at each loan and what my interest rates are and calculate what is the total interest expense that I'm going to pay over the life of the loan. And even though I might have a lower balance loan, it'd be like, it'd be nice to just get rid of that payment. And if you're committed to doing that and then put that money towards another debt, that could be a good workout. But a lot of times, attacking those debts with the highest interest rates is going to be very beneficial for you. So, but you can look at it a couple of different ways. If you're not sure how to do that, how to put that pen to paper and build your own strategy, go in and talk with your lender. Everybody in this business is ready to help get their borrowers into a position to be successful.
Yeah, just when you said you like to do the math and figure out the interest rates, that's where I was like, that's what separates you and me, Justin.
Ah,
I
yeah.
can't do that math. So I was going to ask if we can't do that math or we don't know, go talk to your local lender, right? Is
Yes,
that okay?
absolutely,
All right.
absolutely. And honestly, in most of your loan documentation, you're going to get some information. Oftentimes, they'll provide an amortization schedule that has all of that information right out of the gate at the beginning of the loan, and we can help either show that to you again, or we can pull it up and talk about where it's at in any particular stage of the loan.
Yeah, that's why we have bankers,
We'll
right?
help you. We'll
Yeah,
help you.
yeah. Okay, good. You'll do the math and then just explain to me. All right, so what is it? How much do I end up paying and how long do I pay for it? And we'll go from there. All right. So speaking of paying, what is buy now, pay later?
This is a topic that has been around for a long time. I think it's becoming more and more prevalent. Buy now, pay later is something a lot of retailers are using. I've seen it on home shopping networks or some of the infomercials. It's available on a lot of online retailers where I want to buy this new computer online from whatever the retailer is online. And I can either pay $1,099 today, plus the taxes and shipping,
Right.
or or I can defer my payments out 90 days, or I can split that $1,099 into three equal payments over time. It's a flexible way to buy, and a lot of retailers and a lot of banks, credit unions, and other lenders are incorporating it into what they're doing and how people can borrow. Um, so it's great in terms of it provides flexibility when you have a plan on how you're going to make a purchase. It can spur additional spending. It makes it easier for us
Right.
to acquire these things, these items, these services. So it can put people into I throw a little caution out there because it's similar to a credit card. It can get real easy to spend that money when you don't have to pay for it right away, or you get to defer payments to a future date and then split them up after that. Um, can be a great tool. And like many things, there are good programs and there are bad programs. Buy now, pay later. There's a lot of programs out there that are no fees and no interest. As long as you get it paid by the date or you make your equal monthly installments, you're good to go. And that can be a great program. Other programs, you got to watch for them. They maybe the if they split the payments into multiple payments, the payments when you add them together, it's not always three. I know that's what I've been defaulting to. When you add them all together, it costs more than the item would have if you just would have paid for it in one lump sum payment at checkout. And so there's going to be a cost to it. So just keep an eye on those things and read the terms and conditions. They're usually not that long. Usually those things, if there's going to be fees, charges, or other things going on, it's right near the top of the terms and conditions, and you can spot them pretty quickly.
So we treat buy now, pay later, it sounds like we do a loan, is that when you enter into that agreement, you can't just think about what's the cost in month one. You have to picture, can I afford, do I need, is this the decision I want to make? Use the same approach entering that as you would any loan.
That's right. That's
Okay.
right.
What other recommendations do you have for someone looking for a loan?
Work with a reputable lender. There's a lot of great, easy ways to borrow online. You can borrow from your local banks and credit unions online. There's no reason not to do that. But if you're searching for financing online and it's a company you haven't heard of before, maybe dig a little bit deeper. Make sure they're legitimate, and more importantly, that they're not predatory. That they're not. There are some lenders out there that as soon as you're one day late on a payment, the interest rate goes up and they charge you back interest to a certain date and so on and so forth. Just make sure you know what you're getting into, and keep an eye on that. Beyond that, keep a regular eye on your budget, your cash flow, even if that's just checking your online banking. Try and keep that top of mind so that your spending and your monthly outflow of payments and other obligations don't get out of hand, or don't get to a place where you become uncomfortable. And then going back to another topic is know the full cost of borrowing. And that comes down to, if you're borrowing for a car loan and your interest rate is X%, if you take a full 5, 6, 7 years to pay that vehicle back, we can calculate, and often that amortization schedule, you can see exactly how much you're going to pay in interest charges or finance charges over the life of that loan. And make sure that you're comfortable with paying it. That's the cost of having that big item now, is it's going to cost you a little bit more over time than if you were able to pay for it in all one lump sum. But there's, borrowing is how we're able to navigate some of our big moments in life, whether it's student debt, first car, new home, any of those things. It's rather difficult for the majority of us to finance those things all in one lump sum out of our own pockets. So many times borrowing is necessary, and just talk with your lender, talk with somebody you trust, get advice from family and friends, who they've used and what kind of experiences they've had. And it can be a great tool to get the things done that you're looking to do. And there are people out there in the lending world to help you do it.
I love the notion, and you've repeatedly made reference to it as being a tool. And I love that, because it's not a lottery. It's not a winning scratch off ticket and suddenly you have all this money. It is a tool for you to obtain and achieve your goals, whether that's a second home or a hot water heater, whatever it is that tool. But when in doubt, or if you have questions, talk to your local lender about your situation and how to navigate and use that tool. Get an instruction on the best way to use that tool before you just go in there and start
That's right.
signing paperwork, right? Hey, Justin, I want to thank you so much for taking the time and helping me better understand a little bit about loans and borrowing. And we'll see you back here in a couple of weeks, and you can continue educating us on our finances and the choices and decisions we should be making.
Always a pleasure, Mark. Have a great evening.
Thank you. You too, Justin.